When the first home in Phoenix sold for 11% below its listing price in January 2025, nobody imagined it was the beginning of America's biggest housing reversal since 2008. But deep inside the numbers, a quiet storm was already building, a storm driven not by Wall Street greed, but by millions of ordinary Americans who could no longer afford the American dream. Imagine driving through a once booming neighborhood in Austin. Empty lawns. Price-reduced signs hanging like warning flags. And behind one of those doors sits a man named Mark Reynolds, a 42-year-old software engineer who bought his home at the peak of 2022, and woke up in 2025 realizing the value of his house had dropped by nearly $120,000. His story is not unique. It's the story of millions. America's housing crash did not begin suddenly. It started with a whisper, rising interest rates throughout 2023 and 2024, pushing 30-year mortgage rates close to 8%. But the real breaking point came when inflation kept shrinking purchasing power, turning first-time buyers into long-term renters. Demand collapsed. Sellers panicked. And the market began to slide. But the roots go even deeper. In 2021 and 2022, Wall Street giants like BlackRock and Invitation Homes quietly bought thousands of single-family houses, bidding far above asking prices and fueling the frenzy. Ordinary families never stood a chance. Homes turned into assets, not shelter. But when rents flattened in 2024 and borrowing costs surged, even big investors paused, leaving a market built on momentum suddenly without fuel. This is where the first cracks appeared. Las Vegas. Tampa. Raleigh. These cities saw prices dip first because they had risen the fastest. Investors rushed in during the pandemic, buying remote work dream homes. But when remote work pulled back and companies like Meta, Amazon, and Google forced hybrid schedules, many families returned to big cities. Suddenly, suburban demand shrank like a popped bubble. In late 2024, economists noticed an unusual pattern. Homes were sitting on the market longer, 40 days, then 60, then 90. Sellers were offering huge cuts. Builders were slashing prices, offering free upgrades, even paying buyers closing costs. And by early 2025, the trend was undeniable. America's housing engine had stalled. But the emotional impact was far worse. People like Sarah and Daniel, a young couple from Colorado Springs, had bought a starter home with dreams of raising a family. They took a variable rate mortgage, trusting the market hype. When their monthly payment jumped by $600 in 2024, everything changed. They stopped eating out. Stopped traveling. Stopped planning for a baby. Their home, instead of being their dream, became a financial prison. Across the country, similar stories unfolded. A retired firefighter in Pennsylvania forced to sell his home after 25 years. A single mother in Atlanta losing her down payment when her buyer backed out. The crash wasn't just about falling prices, it was about broken hopes. By mid-2025, something historic happened. Homeowners who bought between 2021 and 2023 became the most underwater group since the Great Recession. For the first time in more than a decade, reports showed tens of thousands of Americans owing more on their house than it was worth. While this was unfolding, policymakers in Washington argued endlessly. Some blamed the Federal Reserve's aggressive rate hikes. Others pointed fingers at corporate landlords, zoning restrictions, or record-high construction costs. But most Americans didn't care whose fault it was, they just wanted relief. Yet one moment defined the turning point. In April 2025, a major home-building company, Lennar, quietly canceled a massive 400-home development project in Texas. Investors panicked. Stock prices of major builders dipped. News channels called it the signal everyone was waiting for. And overnight, fear spread faster than facts. Suddenly homeowners rushed to list their properties before prices dropped further. Inventory spiked. Buyers hesitated. And prices fell even faster. But deep inside this chaos, something else was happening, something nobody talked about. A new generation of Americans stopped believing that owning a home was the only path to stability. They preferred mobility, remote income, renting in walkable cities, living without the burden of a 30-year mortgage. Culturally, the meaning of home was shifting, and the market was shifting with it. As painful as the crash has been, it carries important lessons. Homes are not guaranteed investments. Markets move in cycles, not straight lines. Buying a house at any price just to not miss out is never a strategy, it's a risk. And when financial decisions are driven by fear or hype, collapses become inevitable. The truth behind America's housing crash of 2025 is simple: it wasn't caused by one event. It was caused by a chain reaction: high rates, exhausted buyers, corporate ownership, falling demand, economic uncertainty, and a cultural shift in how Americans live. But here's the surprising part: every crash, no matter how painful, creates new opportunities. Affordable homes return. Investors rethink their strategies. Builders adjust. And ordinary families, the ones who were priced out for years, finally get a chance to enter the market on fair terms. As the dust settles, one question remains, the question only you can answer. If the American dream is changing, what does home truly mean to you today?